Question 1. Which of the following best describes the principle of indemnity in an insurance contract? A. Ensuring that the insured receives compensation equal to their financial loss, no more and no less. B. Guaranteeing profit to the insured after a covered loss. C. Requiring both parties to the contract to perform specific actions simultaneously. D. Mandating that an insurance contract must have consideration in the form of premium and promise. Correct answer. A. Ensuring that the insured receives compensation equal to their financial loss, no more and no less. Explanation. The principle of indemnity ensures that an insured is compensated only to the extent of their financial loss, preventing profit from the insurance policy. This is fundamental to maintaining fairness and discouraging moral hazards. Option B is incorrect because indemnity does not allow profit. Option C misunderstands insurance contract performance timelines, as policies are often unilateral. Option D refers to the element of consideration in contracts but does not define indemnity. Question 2. A Texas policyholder has a homeowner's insurance policy with a replacement cost endorsement. After a covered fire, the insured rebuilds their home with less expensive materials. How will the insurer settle the claim? A. Pay the actual cash value of the home as of the time of the loss. B. Reimburse the full replacement cost of rebuilding the home with identical materials. C. Cover the cost of rebuilding with the less expensive materials chosen by the insured. D. Deny the claim entirely, as the insured did not use identical materials. Correct answer. C. Cover the cost of rebuilding with the less expensive materials chosen by the insured. Explanation. Under a replacement cost endorsement, the insurer agrees to cover the cost of replacing the damaged property. However, if the insured opts for less expensive materials, the claim settlement will align with the actual cost incurred, not the hypothetical cost of using identical materials. Option A is incorrect because replacement cost endorsements avoid depreciation considerations that apply to actual cash value. Option B is incorrect as the settlement depends on actual rebuilding costs. Option D is incorrect because the policyholder's choice of materials does not void the claim. Question 3. Mr. Ramirez owns a small business in Texas and has a commercial general liability CGL policy. A customer slips and falls on his premises, sustaining minor injuries. What is Mr. Ramirez's first duty after the incident to ensure proper claims handling? A. Contact the customer to negotiate a settlement directly. B. Document the incident and notify the insurer promptly. C. Avoid notifying the insurer until a lawsuit is filed. D. Repair the premises immediately without notifying anyone. Correct answer. B. Document the incident and notify the insurer promptly. Explanation. Under the terms of a CGL policy, the insured has a duty to notify the insurer as soon as reasonably possible after an incident that may lead to a claim. Proper documentation is essential to support the claims process and avoid disputes. Option A is incorrect because negotiating directly with the customer can violate policy terms. Option C is incorrect because delayed notification may lead to denial of coverage. Option D fails to address the need to inform the insurer, which could jeopardize the claim. Question 4. A homeowner's insurance policy includes replacement cost coverage for personal property. After a fire, the homeowner's sofa, which had an original cost of $1,200 and a depreciated value of $500, was destroyed. A similar new sofa costs $1,500. What will the insurance company pay under replacement cost coverage? A. $500. B. $1,200. C. $1,500. D. $1,000. Correct answer. C. $1,500. Explanation. Replacement cost coverage reimburses the insured for the cost to replace the damaged property with new property of similar kind and quality, without factoring in depreciation. In this case, because the policy provides replacement cost coverage, the insurer will pay the full replacement cost of the new sofa, which is $1,500. Replacement cost versus actual cash value, CV. Unlike ACV, which considers depreciation, replacement cost covers the current cost to replace the item with a new one of similar quality. Purpose of replacement cost coverage. This type of coverage helps policyholders fully replace lost items rather than receiving a depreciated amount that may not cover a similar new item. Question 5. An insurance agent convinces a policyholder to replace their current life insurance policy with a new one, claiming it will provide better benefits. However, the agent fails to disclose that the new policy has a higher premium and lower death benefit. Which unfair trade practice best describes this situation? A. Churning. B. Twisting. C. Rebidding. D. Misrepresentation. Correct answer. B. Twisting. Explanation. Twisting occurs when an agent persuades a policyholder to cancel their current policy and purchase a new one by misrepresenting the benefits or features of the new policy. This is considered an unfair trade practice because it is deceptive and may not be in the policyholder's best interest. Distinction from churning. Churning involves using the cash value of an existing policy to purchase additional insurance within the same insurer, not necessarily misrepresenting benefits. Importance of full disclosure. Agents must provide complete and accurate information to ensure the policyholder makes an informed decision. Question 6. Under a commercial property insurance policy, a business owner has a building and personal property coverage formed with a business income and extra expense endorsement. Following a covered fire loss, the business is temporarily closed for repairs, and extra costs are incurred to expedite reopening. Which coverage applies to these extra expenses? A. Business income coverage. B. Property damage coverage. C. Extra expense coverage. D. Liability coverage. Correct answer. C. Extra expense coverage. Explanation. Extra expense coverage covers additional costs incurred by the insured to continue or expedite business operations following a covered loss. This endorsement pays for expenses such as renting temporary equipment, paying overtime wages, or contracting additional services to minimize the time needed to resume normal operations. Business income versus extra expense. Business income coverage compensates for lost income, whereas extra expense coverage pays specifically for extra costs aimed at reducing downtime. Commercial property insurance use. This endorsement helps companies limit financial losses by speeding up the return to normal business activities. Question 7. An insured has a commercial auto policy and is involved in an accident that results in bodily injury to others. The accident is determined to be partially their fault and partially the fault of the other driver. Under a comparative negligence standard, how will the insurance company handle the claim? A. Deny the claim due to partial fault. B. Cover the full amount of the damages. C. Pay only a percentage of the damages based on the insured's fault. D. Require the insured to pay the full claim. Correct answer. C. Pay only a percentage of the damages based on the insured's fault. Explanation. Under comparative negligence, an insurer adjusts the claim payout according to the degree of fault attributed to each party involved. If the insured is partially at fault, the insurer will pay a proportionate amount of the damages based on that fault percentage. Comparative negligence principle. Comparative negligence allows multiple parties to share liability for an incident, with each party bearing responsibility for their portion of fault. Distinction from contributory negligence. In states with contributory negligence, any fault by the insured might completely bar recovery. Question 8. A property insurance policy includes a coinsurance clause requiring the insured to cover at least 90% of the property's replacement cost. If the property is valued at $500,000 but insured for only $400,000 and a partial loss of $100,000 occurs, what amount will the insurer pay under the coinsurance provision? A. $100,000. B. $80,000. C. $90,000. D. $50,000. Correct answer. B. $80,000. Explanation. Coinsurance requires the insured to carry a specified percentage, here 90%, of the property's replacement cost to receive full payment for partial losses. Since the insured carried only $400,000 instead of the required $450,000, a penalty is applied. Calculation. Insurance carried insurance required X loss amount calculation. $400,000, $450,000, X $100,000 equals $80,000. Purpose of coinsurance. Coinsurance clauses encourage policyholders to insure their property adequately, helping insurers reduce risk. Question 9. A contractor purchases a builder's risk policy for a construction project. During the course of construction, a severe windstorm damages part of the building under construction. Which of the following statements is correct regarding coverage under the builder's risk policy? A. Only permanent structures are covered and temporary structures are excluded. B. The policy covers both completed and partially completed structures. C. Coverage begins only after the project is fully completed. D. Windstorm damage is excluded under all builder's risk policies. Correct answer. B. The policy covers both completed and partially completed structures. Explanation. A builder's risk policy provides coverage for structures under construction, including both completed and partially completed work. It typically covers risks like windstorms, fire, and theft, which could affect the project before completion. Scope of builder's risk coverage. This policy protects materials, supplies, and labor invested in the construction project against various perils. Clarification of coverage. Coverage begins when construction starts and ends upon project completion or handover, as specified in the policy. Question 10. A business is required to carry commercial general liability (CGL) insurance to protect against liability claims. If the business is sued for damages resulting from an advertisement it posted that allegedly harmed a competitor's reputation, which part of the CGL policy would likely respond? A. Coverage. Bodily injury and property damage. B. Coverage. B. Personal and advertising injury. C. Coverage. C. Medical payments. D. Coverage. D. Product liability. Question 10. A business is required to carry commercial general liability (CGL) insurance to protect against liability claims. If the business is sued for damages resulting from an advertisement it posted that allegedly harmed a competitor's reputation, which part of the CGL policy would likely respond? A. Coverage. Bodily injury and property damage. B. Coverage. B. Personal and advertising injury. C. Coverage. C. Medical payments. D. Coverage. D. Product liability. Question 11. A policyholder has a homeowner's insurance policy with an 80% coinsurance requirement and a dwelling insured for $200,000. The replacement cost of the dwelling is $300,000. If a fire causes $60,000 in damage, how much will the insurance company pay? A. $60,000. B. $50,000. C. $40,000. D. $30,000. Correct answer. B. $50,000. Explanation. The coinsurance clause requires the dwelling to be insured for at least 80% of its replacement cost. Since 80% of $300,000 is $240,000, the policyholder's $200,000 coverage does not meet the requirement, resulting in a penalty. Calculation. Insurance carried, insurance required, X loss amount calculation. $200,000, $240,000, X 60,000 L is equals $50,000. Purpose of coinsurance. Coinsurance encourages policyholders to adequately insure their property, and a penalty applies if the requirement isn't met. Question 12. An insured's business owner's policy, BOP, includes a business interruption endorsement. A covered peril forces the business to close for 30 days, resulting in lost income and payroll expenses. What type of loss is this, and how is it covered? A. Direct loss, covered under property coverage. B. Indirect loss, covered under business interruption. C. Direct loss, covered under extra expense coverage. D. Indirect loss, excluded from coverage. Correct answer. B. Indirect loss, covered under business interruption. Explanation. Business interruption is considered an indirect loss because it results from a primary event, the direct loss, but affects the business's ability to operate. Business interruption coverage in a BOP provides compensation for lost income and certain continuing expenses during the period of restoration. Indirect loss versus direct loss. Direct losses involve actual physical damage, while indirect losses include consequential losses like lost income. Purpose of business interruption coverage. It helps businesses maintain financial stability by covering income and expenses during shutdowns due to covered perils. Question 13. Under a commercial general liability (CGL) policy, which type of liability would cover claims related to injury caused by a defective product after the product has been sold? A. Premises liability. B. Completed operations liability. C. Products liability. D. Advertising injury liability. Correct answer. C. Products liability. Explanation. Products liability under a CGL policy provides coverage for bodily injury or property damage arising from products sold, manufactured, or distributed by the insured after they have left the insured's premises. Scope of products liability. It specifically applies to products that cause harm once they are in the possession of consumers. Purpose of products liability. It protects companies against financial losses from claims due to defective products. Question 14. A garage policy is purchased by an auto repair shop. A customer's vehicle is damaged while in the shop's care. Under which part of the garage policy would this loss likely be covered? A. Garage liability. B. Garage keeper's coverage. C. Business auto coverage. D. Premises liability. Correct answer. B. Garage keeper's coverage. Explanation. Garage keeper's coverage provides protection for customers' vehicles while they are in the care, custody, or control of the garage business. This coverage applies when customer vehicles are damaged by a covered peril, e.g., fire, theft, or vandalism, while on the premises. Garage keepers versus garage liability. Garage keepers covers physical damage to customers' vehicles, whereas garage liability covers the business's liability for other damages or injuries. Importance for auto businesses. This coverage is essential for auto repair shops, as it specifically protects against damages to clients' vehicles. Question 15. Which of the following would generally be excluded from coverage under a commercial property policy? Q. Fire damage to an insured building. B. Windstorm damage to outdoor signs. C. Employee theft of business property. D. Vandalism damage to a business's exterior. Correct answer. C. Employee theft of business property. Explanation. Most commercial property policies exclude employee theft as it is considered a form of internal risk. To cover employee theft, businesses typically need to purchase a separate commercial crime policy. Purpose of exclusions. Policies exclude certain risks to control moral hazards and because other types of insurance, like crime insurance, specifically address them. Additional coverage for theft. Employee theft is a unique risk that requires specialized coverage beyond standard property insurance. Question 16. A professional liability policy provides coverage for which of the following scenarios? A. A restaurant is sued after a customer slips and falls. B. An accountant is sued for errors in tax preparation. C. A contractor is sued for property damage while working on site. D. A retail store is sued for false advertising. Correct answer. B. An accountant is sued for errors in tax preparation. Explanation. Professional liability insurance, also known as errors and omissions, EO, insurance, covers claims related to mistakes or negligence in professional services provided. In this case, an accountant's error in tax preparation is covered, distinct from general liability. General liability covers bodily injury and property damage, while professional liability specifically covers services provided by professionals. Purpose of professional liability. It protects service professionals from claims of inadequate work, errors, or negligence. Question 17. A commercial property owner has a boiler and machinery policy. Which of the following would be covered under this policy? A. Fire damage to the property. B. Loss of income due to a power surge damaging machinery. C. Wind damage to the roof. D. Flood damage to the basement. Correct answer. B. Loss of income due to power surge damaging machinery. Explanation. A boiler and machinery policy, also known as equipment breakdown coverage, provides protection against physical and financial loss due to mechanical or electrical failure. Coverage includes damage to the equipment and may also cover lost income due to equipment breakdown. Unique to equipment breakdown. Standard property policies often exclude mechanical breakdowns, so this policy fills that gap. Scope of boiler and machinery coverage. It specifically addresses internal machinery and equipment issues, not external perils like wind or flood. Question 18. An insured's commercial auto policy has a symbol 1, any auto coverage designation for liability. This designation means A. Coverage applies only to owned autos. B. Coverage applies only to non-owned autos. C. Coverage applies to any auto regardless of ownership. D. Coverage applies only to autos specifically listed in the policy. Correct answer. C. Coverage applies to any auto regardless of ownership. Explanation. Symbol 1 in a commercial auto policy indicates coverage for any auto, whether owned, leased, hired, or borrowed, for liability purposes. It provides the broadest liability coverage available under a commercial auto policy. Purpose of Symbol 1. It ensures that any vehicle used in business operations is covered for liability, reducing the risk of gaps in coverage. Commercial auto symbol system. Each symbol provides different scopes of coverage based on vehicle ownership and use. Question 19. Which endorsement allows a homeowner's insurance policy to cover personal property for additional perils such as accidental loss or damage? A. Inflation guard endorsement. B. Scheduled personal property endorsement. C. Personal property replacement cost endorsement. D. Personal property floater. Correct answer. D. Personal property floater. Explanation. A personal property floater provides broader coverage for personal property, often on an all-risk basis, which includes coverage for accidental loss or damage to valuable items such as jewelry, art, or electronics. Distinction from scheduled personal property. While both cover specific items, a floater generally provides all-risk coverage that applies worldwide. Purpose of personal property floater. It extends coverage to include a wide range of perils beyond the basic homeowner's policy's coverage. Question 20. A business's commercial property insurance includes an agreed value provision. What is the purpose of this provision? A. To allow the insured to receive partial payments. B. To waive the coinsurance requirement. C. To require the insured to pay a deductible on every claim. D. To increase coverage for replacement cost. Correct answer. B. To waive the coinsurance requirement. Explanation. An agreed value provision in a commercial property insurance policy waives the coinsurance requirement as long as the insured and the insurer agree on a specified value for the covered property. This means the insured does not face a penalty if the property is underinsured. Purpose of agreed value. It ensures that both parties agree on a fixed value, simplifying claim settlements and eliminating potential penalties. Coinsurance requirement. Normally, coinsurance requires the insured to maintain coverage equal to a certain percentage of property value, but agreed value eliminates this requirement. Question 21. Which of the following is NOT requirement for a risk to be considered insurable under the principle of insurable risk? A. The loss must be random and accidental. B. The risk must be measurable and quantifiable. C. The risk must involve speculative loss possibilities. D. The risk must be definable and subject to a financial impact. Correct answer. C. The risk must involve speculative loss possibilities. Explanation. Under the insurable risk principle, the risk must involve pure risks, not speculative ones. Pure risks are those that only have the potential for loss, not for gain. Speculative risks involve both potential gain and loss, e.g., gambling or investments, and are typically not insurable. Options A, B, and D are all characteristics of risks that are insurable. Question 22. What is the primary purpose of the Texas Department of Insurance, TDI? A. To promote insurance companies for profit. B. To enforce Texas insurance laws and ensure consumer protection. C. To assist in marketing and advertising insurance products. D. To regulate rates and premiums for all insurers in Texas. Correct answer. B. To enforce Texas insurance laws and ensure consumer protection. Explanation. The primary role of the Texas Department of Insurance, EDI, is to regulate the state's insurance industry to ensure that consumers are protected and that insurers comply with the Texas Insurance Code. This includes oversight of licensing, claims handling, financial solvency, and enforcement of insurance laws. Option is incorrect as the TDI does not promote insurers for profit. Option C is incorrect as marketing and advertising are not the TD's responsibilities. Option D is incorrect because, although TDI does oversee some aspects of rate regulation, its primary role is broader than just rate control. Question 23. Which of the following is a key characteristic of an insurance contract under Texas law? A. The contract must be mutual and bilateral. B. The contract must allow both parties to make unilateral changes without consent. C. The contract must be conditional, with obligations on both parties. D. The contract must contain a waiver of all exclusions for the insured. Correct answer. C. The contract must be conditional, with obligations on both parties. Explanation. An insurance contract is conditional, meaning it outlines specific obligations for both parties, such as the insured's duty to pay premiums and the insurer's duty to provide coverage under the terms of the policy. Option A is incorrect because the contract is unilateral from the insurer's perspective. The insurer makes the promise, and the insured agrees to pay the premium. Option B is incorrect as unilateral changes by one party are generally not allowed without the consent of the other. Option D is incorrect because waivers of exclusions would not be the typical feature of an insurance contract. Question 24. Mr. Adams is reviewing his commercial property insurance policy in Texas. He wants to ensure that he is covered for business interruption due to a covered event. Which of the following policy provisions would address this coverage? A. Business income coverage. B. Liability coverage. C. Property damage coverage. D. General exclusions. Correct answer. A. Business income coverage. Explanation. Business income coverage, often referred to as business interruption insurance, covers loss of income that a business suffers due to covered peril, such as a fire or other disaster that interrupts normal operations. Option B. Liability coverage, addresses third-party injury or property damage, not business income. Option C. Property damage coverage, covers physical damage to property, but does not address lost income. Option D. General exclusions, would not provide coverage but rather outlines situations where the policy would not provide benefits. Question 25. Which of the following best defines the duty to defend in liability insurance? A. The insurer has the right to settle any claim without the insured's consent. B. The insurer has the obligation to provide legal defense to the insured regardless of the claim's merit. C. The insurer is responsible for paying any judgment rendered against the insured. D. The insurer only provides defense if the insured is found to be at fault. Correct answer. B. The insurer has the obligation to provide legal defense to the insured, regardless of the claim's merit. Explanation. The duty to defend is an insurer's obligation to provide a legal defense to the insured when a claim is made, regardless of whether the claim is valid. This is a broad duty, and the insurer must defend the insured unless the claim is clearly excluded under the policy. Option A is incorrect because the insurer needs the insured's consent to settle in some cases. Option C addresses the duty to pay a judgment, which is different from the duty to defend. Option D is incorrect as the duty to defend is not contingent on the insured's fault. Question 26. The Texas homeowner's insurance policy includes water damage coverage. After a heavy storm, water from an overflowing river damages the insured's home. Which of the following statements is true? Regarding this claim, A. The homeowner's policy will pay for the water damage under the standard water damage coverage. B. The homeowner's policy will pay for the damage under flood insurance. C. The homeowner's policy will pay for the damage under windstorm coverage. D. The homeowner's policy will pay for the damage under property damage coverage, with no exclusions. Correct answer. B. The homeowner's policy will pay for the damage under flood insurance. Explanation. Flood damage is typically not covered under a standard homeowner's policy, but it can be covered by a separate flood insurance policy, such as through the National Flood Insurance Program, NFIP. Option A is incorrect because the standard homeowner's policy does not cover flood damage. Option C is incorrect because windstorm coverage typically covers damages caused by wind and not water from flooding. Option D is incorrect because water damage from flooding is excluded under the standard property damage coverage in most homeowners' policies. Question 27. Which of the following is an example of a moral hazard in insurance? A. A person increases their insurance coverage after their home has been damaged. B. A person starts driving recklessly after buying auto insurance. C. A business installs fire alarms to prevent loss after obtaining insurance. D. A person refuses to engage in risk reduction activities despite insurance coverage. Correct answer. B. A person starts driving recklessly after buying auto insurance. Explanation. Moral hazard refers to a change in behavior that increases the risk of a loss because the individual is protected from the consequences by insurance. In this case, driving recklessly after purchasing auto insurance is an example of moral hazard. Option. It describes a reasonable increase in coverage due to the risk. Option C shows risk reduction efforts, which is the opposite of a moral hazard. Option D is more related to negligence but does not specifically reflect the concept of moral hazard, where the insured acts riskier because they have insurance. Question 20. What is the primary purpose of coinsurance and property insurance policies? A. To provide a penalty if the insured fails to carry adequate insurance. B. To ensure the policyholder receives full reimbursement for the replacement cost. C. To reduce the premiums paid by the insured. D. To encourage the insured to buy additional coverage beyond the policy limits. Correct answer. A. To provide a penalty if the insured fails to carry adequate insurance. Explanation. Coinsurance is a clause in property insurance policies that penalizes the insured if they do not maintain a certain percentage of coverage relative to the value of the property. If the insured fails to meet the required coinsurance percentage, it will not receive the full reimbursement amount, even if the loss occurs. Option B is incorrect because coinsurance does not guarantee full reimbursement if the insured is underinsured. Option C is incorrect because coinsurance can actually increase the cost of a claim. Option D is not the purpose of coinsurance. Its goal is to ensure the insured carries adequate coverage. Question 29. Which of the following insurance policies would most likely provide general liability coverage for a Texas business? A. Business owner's policy, BOP. B. Commercial auto policy, CAT. C. Inland marine insurance. D. Workers' compensation insurance. Correct answer. A business owner's policy, BOP. Explanation. A business owner's policy, BOP, typically includes general liability coverage, which protects businesses against third-party claims for bodily injury or property damage. Option B. Commercial auto policy covers vehicles, not general liability. Option C. Inland marine insurance covers property in transit or specialized property, not general liability. Option D. Workers' compensation insurance covers employee injuries, not general liability for third-party claims. Question 30. Which of the following scenarios illustrates the concept of risk retention in risk management? A. A company buys an insurance policy to protect against property loss. B. A company installs a security system to prevent theft. C. A company chooses not to insure its equipment and absorbs the financial loss from theft. D. A company shares its risk with another company through a joint venture. Correct answer. C. A company chooses not to insure its equipment and absorbs the financial loss from theft. Explanation. Risk retention occurs when a business or individual decides to accept the risk and absorb the potential financial loss rather than transferring the risk to an insurer. In this case, the company chooses not to buy insurance for the equipment and assumes responsibility for any loss. Option is risk transfer, not retention. Option B is risk reduction, as the company is actively working to lower the chances of a loss. Option D involves risk sharing, not retention. Question 31. Under a homeowner's insurance policy, which of the following best describes the primary purpose of an additional living expense provision? A. To cover the costs of repairing the insured's property after a loss. B. To reimburse the insured for lost rental income. C. To cover increased expenses for temporary housing if the home is uninhabitable due to a covered loss. D. To pay for routine maintenance costs of the insured property. Correct answer. C. To cover increased expenses for temporary housing if the home is uninhabitable due to a covered loss. Explanation. The additional living expense L provision in a homeowner's insurance policy is designed to help the policyholder maintain their standard of living if their home is rendered uninhabitable by a covered peril, such as fire or storm damage. This coverage reimburses costs for temporary housing, meals, and other increased expenses until repairs are complete. It does not cover repairs to the property, lost rental income, or regular maintenance costs, which are addressed in different parts of the policy or are excluded. Question 32. What is the purpose of subrogation in a property insurance policy? A. To allow the insurer to recover funds from a third party responsible for a loss. B. To waive the deductible for the insured. C. To extend coverage to multiple properties owned by the insured. D. To provide A discount on premium for policyholders who have no claims. Correct answer. A. To allow the insurer to recover funds from a third party responsible for a loss. Explanation. Subrogation gives the insurer the right to pursue a third party that caused a loss to the insured. After the insurer pays the insured for the loss, it can step into the shoes of the insured to seek compensation from a liable party. This process helps insurers control costs and premiums. Deductibles, multiple property coverage, and claim-free discounts are not related to subrogation. Question 33. An insured has a replacement cost policy on their property, but they are only compensated for the actual cash value, CV, after a loss. Under what condition would they later receive the full replacement cost? They agree to settle the claim immediately without further adjustments. B. They complete the necessary repairs or replacement of the damaged property. C. The damage is caused by a natural disaster. D. They have been insured with the same company for over 5 years. Correct answer. B. They complete the necessary repairs or replacement of the damaged property. Explanation. In a replacement cost policy, initial payments may be limited to the actual cash value, ACV, until the insured provides evidence of repairs or replacement. Once these are completed, the insurer typically pays the difference up to the full replacement cost. The policyholder's tenure with the company or cause of damage does not typically impact this condition, and settling without adjustments would forfeit the chance for additional compensation. Question 34. Which of the following is an example of loss of use coverage in a property insurance policy? Q. A reimbursement for temporary housing costs if the insured's home is uninhabitable. B. Replacement of personal property damaged by fire. C. Payment for legal expenses if the insured is sued. D. Coverage for landscaping destroyed by a covered peril. Correct answer. A reimbursement for temporary housing costs if the insured's home is uninhabitable. Explanation. Loss of use coverage, also known as additional living expenses, is designed to help with temporary living costs if the insured's residence becomes uninhabitable due to a covered loss. This coverage is separate from property replacement, legal liability, or landscaping coverage, which are handled by other sections of a policy. Question 35. Which of the following best describes the concept of coinsurance in property insurance? A. A policy provision requiring the insured to pay a percentage of each claim. B. An arrangement where multiple insurers cover the same property. C. A requirement that the insured maintain insurance equal to a specified percentage of the property's value. D. An additional premium charged for high-value items. Correct answer. C. A requirement that the insured maintain insurance equal to a specified percentage of the property's value. Explanation. Coinsurance is a policy condition requiring the insured to carry insurance equal to a specific percentage, often 80% or 90% of the property's value. If the insured fails to meet this requirement, they may be penalized by receiving a reduced claim payout. This concept does not involve per claim cost sharing, multiple insurers, or high-value item premiums. Question 36. In a commercial property policy, what is typically covered under business interruption insurance? A. Physical damage to the insured's building. B. Lost profits and ongoing expenses while the business is closed due to a covered peril. C. Costs of replacing damaged machinery. D. Payment for employee injury claims. Correct answer. B. Lost profits and ongoing expenses while the business is closed due to covered peril. Explanation. Business interruption insurance provides financial protection for a business's lost income and ongoing expenses if it cannot operate due to a covered event like a fire. Physical damage, machinery replacement, and employee injury claims are addressed separately, usually under property, equipment, and workers' compensation coverage. Question 37. An insured person accidentally causes a kitchen fire while cooking, leading to extensive smoke and fire damage throughout the home. Which part of a homeowner's insurance policy would most likely pay for the repair costs? A. Personal liability coverage. B. Medical payments to others. C. Dwelling coverage. D. Loss of use coverage. Correct answer. C. Dwelling coverage. Explanation. Dwelling coverage in a homeowner's policy is designed to cover physical damage to the insured structure, including fire and smoke damage. Personal liability coverage is for injuries or property damage to others. Medical payments cover injuries to guests, and loss of use covers additional living expenses if the home is uninhabitable. Question 38. Which of the following describes a key difference between an open peril policy and a named peril policy? A. An open peril policy covers only specified risks, while a named peril policy covers all risks except those excluded. B. A named peril policy covers only specified risks, while an open peril policy covers all risks except those specifically excluded. C. Both policies cover all risks but differ in their exclusions. D. A named peril policy is for homeowners, while an open peril policy is for renters. Correct answer. B. A named peril policy covers only specified risks, while an open peril policy covers all risks except those specifically excluded. Explanation. Named peril policies limit coverage to explicitly listed perils, e.g., fire, theft, whereas open peril policies provide broader protection, covering any risk except those listed as exclusions. These policies apply to both homeowners and renters, contrary to answer option D. Question 39. Which of the following is true about replacement cost coverage compared to actual cash value? Receive coverage. The replacement cost pays the depreciated value, while ACV pays for the full replacement without depreciation. B. Replacement cost pays the full cost to replace the item without depreciation, while ACV deducts depreciation. C. Both replacement cost and ACV are calculated based on the market value of the item. D. ACV typically has a higher premium than replacement cost coverage. Correct answer. B. Replacement cost pays the full cost to replace the item without depreciation, while ACV deducts depreciation. Explanation. Replacement cost coverage reimburses the insured for the full cost to replace damaged property with a similar item without considering depreciation. Actual cash value, ACV, coverage, however, takes depreciation into account, meaning the insured receives a lesser amount based on the item's age or condition. Question 40. If a policyholder fails to disclose a known hazard when applying for property insurance, what could be the insurer's response upon discovering this omission after a loss occurs? The insurer must still pay the claim regardless of the omission. B. The insurer may rescind the policy if the omission is considered material. C. The insurer can deny the claim but cannot cancel the policy. D. The insurer is required to adjust the premium to reflect the undisclosed risk. Correct answer. B. The insurer may rescind the policy if the omission is considered material. Explanation. In property insurance, a material omission, such as failing to disclose a significant hazard, can give the insurer grounds to rescind, void, the policy if it influenced the underwriting decision. Non-material omissions may not affect coverage, and premium adjustments typically do not apply retroactively in such cases. Question 41. Which of the following statements best describes a deductible in an insurance policy in Texas? The amount the insurer pays before the insured is required to pay anything. B. The portion of the policy premium that is refundable if no claims are made. C. The amount the insured must pay out of pocket before the insurer's coverage begins. D. The percentage of the claim that the insurer will cover after the deductible is met. Correct answer. C. The amount the insured must pay out of pocket before the insurer's coverage begins. Explanation. In Texas, a deductible is the amount the insured must pay before the insurance coverage kicks in. This helps keep premiums affordable by sharing some of the financial responsibility with the insured. Option is incorrect because it describes the insurer's payment, not the insured's deductible. Option B is incorrect because a deductible is not a refundable amount. Option D describes a copayment or coinsurance, not a deductible. Question 42. In Texas, what is the maximum penalty an insurance company may face for failing to comply with the state's insurance regulations? $5,000 per violation. B. $10,000 per violation. C. $50,000 per violation. D. $100,000 per violation. Correct answer. B. $10,000 per violation. Explanation. Under Texas insurance law, an insurer that fails to comply with state regulations may be penalized up to $10,000 per violation. The Texas Department of Insurance, TDI, enforces these penalties to ensure that insurance companies operate in compliance with state laws and protect consumers. Options A, C, and D are incorrect as the penalty for each violation is $10,000 under Texas law. Question 43. Which of the following is considered a standard policy provision in a homeowner's insurance policy in Texas? A. The insured must report all incidents to the local authorities within 24 hours. B. The insurer may cancel the policy at any time with no prior notice. C. The policyholder must maintain the property to minimize risk of loss. D. The insurance company automatically adjusts the policy limits annually. Correct answer. C. The policyholder must maintain the property to minimize risk of loss. Explanation. Homeowners' policies in Texas typically include provisions that require the insured to maintain the property and take reasonable steps to prevent damage or loss. This is part of the duty to prevent loss provision option. It may be a requirement for certain types of claims, but it is not a standard policy provision. Option B is incorrect because an insurer must provide notice before canceling a policy. Option D is incorrect because automatic annual adjustments are not standard in homeowners' policies unless specified. Question 44. Which of the following situations would likely be covered under comprehensive auto insurance in Texas? A. An accident where the insured is at fault and crashes into a tree. B. Damage to the car from a vandalism incident. C. Injury to another driver caused by the insured's negligence. D. Damage to the car caused by hitting a pothole. Correct answer. B. Damage to the car from a vandalism incident. Explanation. Comprehensive auto insurance in Texas covers damage to the insured vehicle caused by non-collision incidents, including vandalism, theft, fire, and natural disasters. Option A is incorrect because collision insurance would cover this, not comprehensive. Option C refers to liability insurance, not comprehensive. Option D would be covered by collision insurance if the insured hits a pothole, but comprehensive insurance would not apply. Question 45. Which of the following is an example of a hazard and risk management in Texas? A. A building located near a floodplain. B. A fire that causes damage to property. C. A person filing a false claim with the insurance company. D. An insurance policy that covers multiple types of loss. Correct answer. A. A building located near a floodplain. Explanation. A hazard is something that increases the likelihood or severity of a loss. A building located near a floodplain is a hazard because it increases the risk of flood damage. Option B describes the loss, not the hazard. Option C refers to unethical behavior, moral hazard, but not a physical hazard. Option D is an example of a risk management tool, not a hazard itself. Question 46. What type of insurance coverage protects a professional from claims of negligence or inadequate work? A. General liability insurance. B. Workers' compensation insurance. C. Professional liability insurance. D. Business owner's policy. Correct answer. C. Professional liability insurance. Explanation. Professional liability insurance, also known as errors and omissions insurance, covers professionals against claims of negligence or inadequate work. General liability insurance, A, covers third-party bodily injury and property damage. Workers' compensation, B, covers employee injuries. A business owner's policy, D, is a comprehensive policy for small businesses. Question 47. Which of the following statements about a deductible in an insurance policy is correct? A, it is the amount the insurer pays before the insured contributes. B, it is the maximum amount the insured will pay in a policy period. C, it is the portion of a covered loss paid by the insured before insurance coverage begins. D, it is a premium rebate offered at the end of the policy term. Correct answer. C, it is the portion of a covered loss paid by the insured before insurance coverage begins. Explanation. A deductible is the amount an insured must pay out of pocket before the insurer covers any costs for a claim. It does not involve the insurer paying first A maximum cap on insured payments, B, or a rebate, D. Question 48. What type of homeowner's insurance coverage is specifically for additional living expenses if a home is uninhabitable due to covered peril? A, dwelling coverage. B, personal property coverage. C, additional living expenses, hail coverage. D. Liability coverage. Correct answer. C. Additional living expenses. AL coverage. Explanation. ALE coverage pays for the additional costs of living elsewhere while the home is being repaired after damage from a covered peril. Dwelling coverage A. Repairs or rebuilds the home. Personal property coverage B. Covers belongings. And liability coverage D. Protects against legal claims. Question 49. What is the primary benefit of having a HA5 homeowners insurance policy compared to a HA3 policy? A. It provides coverage only for named perils. B. It offers comprehensive open peril coverage for both the dwelling and personal property. C. It has a lower premium cost. D. It includes earthquake insurance as standard. Correct answer. B. It offers comprehensive open peril coverage for both the dwelling and personal property. Explanation. A HA5 policy covers all perils except those specifically excluded for both the dwelling and personal property. A HA3 policy provides open peril coverage for the dwelling but named peril coverage for personal property. HA5 does not inherently include earthquake insurance. D. Or come with lower premiums. C. Question 50. Which of the following is not typically covered under a standard homeowner's insurance policy? A. Damage from fire. B. Theft of personal belongings. C. Flood damage. D. Vandalism. Correct answer. C. Flood damage. Explanation. Flood damage is generally excluded from standard homeowners insurance policies and requires separate flood insurance. Fire damage A. Theft B. and vandalism D. are typically covered by most standard policies. Question 51. What does an umbrella insurance policy primarily provide? A. Coverage for personal belongings up to their replacement value. B. Additional liability coverage beyond the limits of other policies. C. Comprehensive health coverage for family members. D. Protection against uninsured motorist claims. Correct answer. B. Additional liability coverage beyond the limits of other policies. Explanation. An umbrella insurance policy provides extra liability coverage beyond the limits of the insured's existing policies, such as auto or homeowners insurance. Does not cover personal belongings. A. Comprehensive health coverage. C. Or uninsured motorist claims. D. Question 52. Which of the following best describes a peril in the context of insurance? A condition that increases the chance of a loss. B. The actual cause of a loss. C. A cause that excludes certain types of coverage. D. The maximum coverage limit of a policy. Correct answer. B. The actual cause of a loss. Explanation. A peril is the specific risk or event that causes a loss, such as fire, theft, or a storm. A condition increasing the chance of loss. A. Is a hazard, while exclusions C. and policy limits D. relate to policy terms. Question 53. In auto insurance, what does PIP, personal injury protection, coverage typically include? A. Damage to your vehicle from a collision. B. Legal defense costs in case of a lawsuit. C. Medical expenses for injuries regardless of fault. D. Liability for damages you cause to other vehicles. Correct answer. C. Medical expenses for injuries regardless of fault. Explanation. PIP coverage helps pay for medical expenses and sometimes lost wages for the policyholder and passengers, regardless of who is at fault in an accident. Does not cover vehicle damage. A. Legal defense. B. Or third-party liability. D. Question 54. What is the term for the initial amount an insured person must pay before their insurance starts covering expenses? A. Copayment. B. Premium. C. Deductible. D. Coinsurance. Correct answer. C. Deductible. Explanation. A deductible is the amount paid out of the pocket by the insured before the insurance company starts to cover costs. Copayment A. is a fixed amount for a service. A premium B. is the payment for the policy. And coinsurance D. is a cost-sharing arrangement after the deductible. Question 55. What is the main function of an insurance premium? A. It acts as a deductible in a policy. B. It represents the total amount of coverage available. C. It is the periodic payment made by the policyholder to maintain insurance coverage. D. It is the maximum benefit an insurer will pay for a claim. Correct answer. C. It is the periodic payment made by the policyholder to maintain insurance coverage. Explanation. An insurance premium is the payment made by the policyholder to keep their insurance policy active. It is not the deductible, A, the total coverage amount, B, or the maximum payout, D. Question 56. In Texas, which of the following is considered a prohibited practice by an insurance company, A, refusing to renew a policy based on an increase in claims, B, offering discounts to policyholders who bundle multiple policies, C, offering a premium rebate for claims for years, D, requiring additional documentation after a claim is filed? Correct answer. A, refusing to renew a policy based on an increase in claims. Explanation. In Texas, insurers are prohibited from refusing to renew a policy solely because a policyholder has filed a claim unless there is evidence of fraud or misrepresentation. Option B is not a prohibited practice, as bundling policies is commonly offered. Option C could be offered by insurers but is not a mandatory practice. Option D is permissible as long as the documentation request is reasonable. Question 57. What is the purpose of the Texas Property and Casualty Insurance Guarantee Association? A, to provide reinsurance for insurance companies operating in Texas. B, to pay claims when an insurer becomes insolvent. C, to regulate premiums and adjust claims for insurance companies. D, to provide financial assistance to insurers after natural disasters. Correct answer. B, to pay claims when an insurer becomes insolvent. Explanation. The Texas Property and Casualty Insurance Guarantee Association provides financial protection for policyholders in the event that an insurance company becomes insolvent, pays covered claims up to certain limits to help policyholders avoid financial hardship. Option is incorrect because the association does not provide reinsurance. Option C and D do not describe the primary purpose of the association. Question 58. Which of the following is typically not covered by a personal auto policy, PAP, in Texas? A, liability for injuries to another driver in a car accident. B, damage to your car from hitting a tree. C, medical bills for injuries to you and your passengers. D, damage to your car from flooding. Correct answer. D, damage to your car from flooding. Explanation. Flood damage is typically not covered by a standard personal auto policy in Texas unless the insured has purchased specific coverage, such as comprehensive insurance. Option A is covered under liability insurance, B is covered under collision insurance, and C is covered under medical payments or personal injury protection, PIP, coverage. Question 59. Which of the following does a Texas homeowner's insurance policy typically include as part of its basic coverage? A, coverage for lost wages due to fire at the insured property. B, liability coverage for injuries occurring on the insured property. C, comprehensive coverage for vehicle damage caused by hail. D, reimbursement for the cost of replacing stolen items with new ones. Correct answer. B, liability coverage for injuries occurring on the insured property. Explanation. A typical Texas homeowner's insurance policy includes liability coverage for injuries that occur on the insured's property. This is to protect the homeowner from lawsuits for bodily injury or property damage. Option A is incorrect because lost wages are generally not covered by homeowners insurance. Option C refers to auto insurance, not homeowners insurance. Option D is incorrect because homeowners insurance generally provides coverage based on the depreciated value of stolen items unless the policy specifically offers replacement cost coverage. Question 60. In Texas, how soon must an insurer acknowledge receipt of a claim? A, 3 days. B, 5 days. C, 10 days. D, 15 days. Correct answer. B, 5 days. Explanation. According to Texas law, an insurer must acknowledge the receipt of a claim within 5 days of receiving it. This ensures that the insurer is aware of the claim and can begin the process of investigating and processing it. Option A, C, and D are incorrect because the time frame is 5 days under Texas law. Question 61. Which of the following would likely be covered under Texas medical payments coverage in an auto insurance policy? A, repair costs for damage to the insured vehicle. B. Medical bills for injuries sustained by the driver and passengers, regardless of fault. C. Property damage caused to another vehicle in an accident. D. Lost wages due to an accident. Correct answer. B. Medical bills for injuries sustained by the driver and passengers, regardless of fault. Explanation. Medical payments coverage in Texas auto insurance policies covers medical expenses for the driver and passengers injured in an accident, regardless of who is at fault. Option is covered by collision coverage. Option C is covered under liability insurance for property damage. Option D would require a different type of coverage, such as underinsured motorist coverage or disability insurance. Question 62. In Texas, what is the main purpose of the Texas Windstorm Insurance Association, TWIA, to offer insurance for natural disasters that affect the entire state of Texas? B. To provide homeowners insurance to people in coastal areas prone to windstorms. C. To provide flood insurance for properties located in flood-prone areas. D. To regulate the price of homeowners insurance in Texas coastal areas. Correct answer. B. To provide homeowners insurance to people in coastal areas prone to windstorms. Explanation. The Texas Windstorm Insurance Association, TWIA, provides windstorm and hail damage coverage for homeowners in Texas coastal areas, where private insurers may not offer coverage due to high risks. TWIA does not provide flood insurance, option C, or regulate pricing, option D. Option is incorrect because TWIA focuses specifically on windstorm and hail coverage. Question 63. What is the primary difference between actual cash value, ACV, and replacement cost coverage in Texas homeowners insurance? The ACV pays for repairs while replacement cost pays for new items. B. ACV considers depreciation while replacement cost pays for the item without depreciation. C. ACV only covers the structure of the home while replacement cost covers personal property. D. ACV is always more expensive than replacement cost coverage. Correct answer. B. ACV considers depreciation, while replacement cost pays for the item without depreciation. Explanation. Actual cash value, ACV, coverage factors in depreciation, meaning the payout will be lower than the cost of a new item. Replacement cost coverage, however, does not factor in depreciation and pays the full cost to replace the item. Option A is incorrect because both cover repair or replacement, but ACV includes depreciation. Option C is not accurate as both types of coverage apply to structures and personal property. Option D is incorrect because replacement cost coverage is typically more expensive than ACV. Question 64. Which of the following is required for an insurer to cancel a personal auto policy in Texas? A. The insurer must provide 15 days notice if the policy is being canceled due to non-payment. B. The insurer can cancel a policy at any time without notice for any reason. C. The insurer must provide 45 days notice for cancellation due to underwriting reasons. D. The insurer must refund 100% of the premium paid if the policy is canceled. Correct answer. A. The insurer must provide 15 days notice if the policy is being canceled due to non-payment. Explanation. In Texas, if an auto policy is being canceled due to non-payment, the insurer must provide 15 days notice. For other reasons, such as underwriting issues, the insurer must provide 30 days notice. Option B is incorrect because cancellation without notice is not permitted. Option C is inaccurate because 30 days notice is required for underwriting-related cancellations. Option D is incorrect as insurers are not required to refund 100% of the premium, and the refund is prorated. Question 65. Which of the following types of insurance would not be required by law in Texas? A. Health insurance. B. Homeowners insurance. C. Auto liability insurance. D. Workers' compensation insurance for employers with one or more employees. Correct answer. A. Health insurance. Explanation. In Texas, health insurance is not required by law for individuals, although it is strongly encouraged and may be mandated for certain employees under the Affordable Care Act. Homeowners insurance is typically required by lenders if the home is mortgaged. Auto liability insurance is required for all drivers in Texas. Workers' compensation insurance is required for most employers with employees, although Texas is one of the few states where employers can opt out of providing workers' compensation insurance. Question 66. Which of the following best describes coinsurance eka property insurance policy? A. The sharing of risk between two insurers on a single policy. B. A penalty applied for underinsuring a property. C. An agreement that pays for all claims without any deductible. D. The splitting of premium payments between the insured and the insurer. Correct answer. B. A penalty applied for underinsuring a property. Explanation. Coinsurance is a clause that requires the policyholder to insure their property to a certain percentage of its value, typically 80% or more. If the property is underinsured, the insured may face a penalty when filing a claim. Options A, C, and D are not accurate descriptions of coinsurance. Question 67. What type of life insurance policy accumulates cash value over time? A. Term life insurance. B. Whole life insurance. C. Accidental death insurance. D. Variable annuity insurance. Correct answer. B. Whole life insurance. Explanation. Whole life insurance policies provide lifetime coverage and include a cash value component that accumulates over time. Term life insurance, option A, does not build cash value. Accidental death insurance, option C, provides a payout only for accidental deaths, and variable annuity insurance, option D, is an investment product with different features. Question 68. Which of the following is typically an OT covered under a standard homeowner's insurance policy? A. Fire damage to the insured's home. B. Theft of personal belongings inside the home. C. Flood damage from rising water. D. Windstorm damage. Correct answer. C. Flood damage from rising water. Explanation. Standard homeowners insurance policies do not cover flood damage. Flood coverage must be purchased as a separate policy or through specialized endorsements. Fire, theft, and windstorm damage, options A, B, and D, are commonly covered perils in standard policies. Question 69. What is an example of a peril that comprehensive auto insurance typically covers? A. Damage from a car accident with another vehicle. B. A tree falling on the insured's car during a storm. C. Damages due to driving over a pothole. D. Liability for injuries to another driver. Correct answer. B. A tree falling on the insured's car during a storm. Explanation. Comprehensive auto insurance covers damages not related to collisions, such as natural disasters, vandalism, or theft. Option. It describes collision coverage. Option C may fall under collision coverage, and option D refers to liability insurance. Question 70. In health insurance, what does the term out-of-pocket maximum mean? A. The maximum amount the insurer will pay for a claim. B. The total expenses the insured must pay before the policy covers anything. C. The maximum amount an insured pays for covered services in a policy period before the insurer covers 100% of the remaining costs. D. The amount an insured pays for non-covered services. Correct answer. C. The maximum amount an insured pays for covered services in a policy period before the insurer covers 100% of the remaining costs. Explanation. The out-of-pocket maximum limits how much the insured will spend on deductibles, copayments, and coinsurance for covered services in a policy year. Once reached, the insurer covers 100% of additional covered expenses. Options A, B, and D do not accurately define this term. Question 71. What is the primary purpose of an insurance deductible? A. To increase the total coverage amount provided by the insurer. B. To reduce the premium paid by the policyholder. C. To share the cost of a claim between the insurer and the policyholder. D. To extend the length of the policy coverage period. Correct answer. C. To share the cost of a claim between the insurer and the policyholder. Explanation. A deductible is the amount the policyholder must pay out of pocket before the insurer covers the remaining cost of a claim. It ensures that the policyholder shares in the risk, helping to deter small, frequent claims. Options A, B, and D do not describe the purpose of a deductible. Question 72. Which of the following best describes actual cash value in an insurance policy? A. The cost to replace an item minus depreciation. B. The replacement cost without any deductions. C. The highest amount the insurer will pay in a claim. D. The appraised value of the property at the time of sale. Correct answer. A. The cost to replace an item minus depreciation. Explanation. Actual cash value, ACV, represents the replacement cost of an item minus depreciation, reflecting its current value rather than the original purchase or replacement cost. Options B, C, and D do not accurately define ACV. Question 73. In which situation would uninsured motorist coverage apply? A. When the insured hits an animal on the road. B. When the insured causes damage to another driver's car. C. When the insured is involved in an accident with an at-fault driver who lacks sufficient insurance. D. When the insured's car is stolen. Correct answer. C. When the insured is involved in an accident with an at-fault driver who lacks sufficient insurance. Explanation. Uninsured motorist coverage protects the policyholder if they are in an accident caused by another driver who either has no insurance or insufficient coverage. Options A, B, and D do not describe situations covered by uninsured motorist insurance. Question 74. What is the primary benefit of purchasing an umbrella insurance policy? A. It lowers the cost of the policyholder's primary insurance policies. B. It provides comprehensive coverage for all types of incidents. C. It offers additional liability coverage beyond the limits of the underlying policies. D. It insures against property damage only. Correct answer. C. It offers additional liability coverage beyond the limits of the underlying policies. Explanation. Umbrella insurance extends the liability coverage limits of home, auto, and other personal insurance policies, providing extra protection against large claims or lawsuits. Options A, B, and D do not correctly explain the purpose of umbrella insurance. Question 75. What does a policy's declarations page typically include? A. A list of excluded perils. B. Information on how to file a claim. C. The names of the insured, policy limits, and premium amount. D. A detailed description of how claims are processed. Correct answer. C. The names of the insured, policy limits, and premium amount. Explanation. The declarations page is an overview of key policy details, including the names of the insured, coverage limits, premium amount, and effective policy dates. Options A, B, and D cover other sections or documents of the policy, not the declarations page. Question 76. Which of the following is an OTA factor used by insurers to determine auto insurance premiums? A. The policyholder's driving history. B. The policyholder's age and gender. C. The color of the policyholder's car. D. The policyholder's location and type of vehicle. Correct answer. C. The color of the policyholder's car. Explanation. Insurers consider factors like driving history, age, gender, location, and the type of vehicle when determining auto insurance premiums. However, the color of a car is not typically used as a factor in premium calculations. Options A, B, and D are valid underwriting considerations. Question 77. What type of insurance policy would cover an injury to a guest at the policyholder's home? A. Collision insurance. B. Liability coverage under a homeowner's insurance policy. C. Comprehensive auto insurance. D. Personal property coverage. Correct answer. B. Liability coverage under a homeowner's insurance policy. Explanation. Liability coverage in a homeowner's insurance policy covers injuries to guests or visitors on the insured's property. This protection ensures that the policyholder can cover medical expenses or legal fees associated with such incidents. Options A, C, and D are unrelated to this type of coverage. Question 78. What does bodily injury liability insurance cover in an auto policy? A. Damages to the insured's vehicle. B. Medical expenses and lost wages for others injured by the insured. C. Comprehensive coverage for damages unrelated to accidents. D. The repair of pothole damage to the insured's car. Correct answer. B. Medical expenses and lost wages for others injured by the insured. Explanation. Bodily injury liability covers the medical expenses and lost wages of third parties injured in an accident where the insured is at fault. helps protect the insured from financial liability related to these damages. Options A, C, and D do not describe bodily injury liability coverage. Question 79. Why might someone consider purchasing a rider for their homeowner's insurance policy? A, to avoid having a deductible on claims. B, to gain additional coverage for items not fully covered by the base policy. C, to reduce the overall premium of the policy. D, to ensure their property taxes are covered. Correct answer. B, to gain additional coverage for items not fully covered by the base policy. Explanation. A rider or endorsement provides extra coverage for valuable items or specific situations that may not be adequately covered under the standard policy terms. Options A, C, and D do not correctly describe the purpose of an insurance rider. Question 80. What is the difference between open perils and named perils policies? A. Open perils policies cover only specific losses, while named perils cover all losses. B. Named perils policies cover only specified events, while open perils cover all events not specifically excluded. C. Open perils policies require higher deductibles than named perils. D. Named perils policies are only applicable to life insurance. Correct answer. B. Named perils policies cover only specified events, while open perils cover all events not specifically excluded. Explanation. A named perils policy only covers losses caused by events explicitly listed in the policy, while an open perils policy covers all events except those specifically excluded. Options A, C, and D do not accurately describe the differences between these types of policies. Question 81. Under a standard homeowner's insurance policy, which of the following perils is typically not covered? A. Fire. B. Theft. C. Earthquake. D. Windstorm. Correct answer. C. Earthquake. Explanation. Standard homeowners insurance policies generally exclude earthquake damage, which must be covered by a separate endorsement or policy. Fire, theft, and windstorm are commonly included in basic homeowners coverage. Question 82. In a commercial property policy, the coinsurance clause is designed to A. Eliminate the deductible for small claims. B. Encourage the insured to insure their property to a certain percentage of its value. C. Limit the amount an insurer will pay for a liability claim. D. Provide coverage for additional living expenses. Correct answer. B. Encourage the insured to insure their property to a certain percentage of its value. Explanation. The coinsurance clause requires the insured to carry coverage equal to a specified percentage, usually 80%, 90%, or 100% of the property's value. Failure to do so results in a reduced payout on claims, as the insured essentially becomes a coinsurer. Question 83. Which of the following is covered under the liability section of a personal auto policy? A. Damage to the insured's own vehicle from a collision. B. Injuries to passengers in the insured's vehicle due to the insured's negligence. C. Medical expenses for the insured's own injuries. D. Physical damage to the insured's personal property in the car. Correct answer. B. Injuries to passengers in the insured's vehicle due to the insured's negligence. Explanation. The liability section of a personal auto policy covers bodily injury and property damage for which the insured is legally responsible, including injuries to passengers in the insured's vehicle when the insured is at fault. Damage to the insured's own vehicle and personal property is covered under different sections. Question 84. Which of the following statements about umbrella liability insurance is correct? A. It covers only property damage. B. It provides excess liability coverage over primary policies. C. It replaces the need for homeowners and auto insurance. D. It covers medical payments for the insured. Correct answer. B. It provides excess liability coverage over primary policies. Explanation. An umbrella policy provides additional liability coverage that goes beyond the limits of the insured's primary policies, such as homeowners and auto. It acts as extra protection for large liability claims. Question 85. Which type of commercial auto insurance coverage is specifically intended to protect against damages caused by uninsured or underinsured drivers? A. Collision coverage. B. Comprehensive coverage. C. Uninsured underinsured motorist coverage. D. Liability coverage. Correct answer. C. Uninsured underinsured motorist coverage. Explanation. Uninsured underinsured motorist coverage in a commercial auto policy provides protection if the insured's vehicle is hit by a driver who either has no insurance or insufficient insurance to cover the damages. Question 86. A business purchases business interruption insurance. This coverage is designed to A. Compensate for lost income due to physical damage to the business property. B. Cover expenses associated with employee injuries. C. Pay for repairs to business equipment. D. Replace inventory damaged by fire. Correct answer. A. Compensate for lost income due to physical damage to the business property. Explanation. Business interruption insurance provides income replacement if a covered peril causes the business to halt operations temporarily. It is meant to keep the business financially stable until it can resume normal operations. Question 87. Under the personal articles floater PAF, which of the following would typically be covered? A. General household items. B. Scheduled high-value personal items like jewelry and art. C. All items of personal property. D. Business inventory. Correct answer. B. Scheduled high-value personal items like jewelry and art. Explanation. The personal articles floater PAF provides coverage for specific high-value items that may have limited coverage under standard policies such as jewelry, art, and collectibles by insuring them separately. Question 88. Which of the following best describes replacement cost coverage? A. It pays the market value of a damaged item. B. It pays the depreciated value of a damaged item. C. It reimburses the policyholder for the cost to replace an item with a new one similar kind and quality. D. It covers the sentimental value of a damaged item. Correct answer. C. It reimburses the policyholder for the cost to replace an item with a new one similar kind and quality. Explanation. Replacement cost coverage reimburses the policyholder for the current cost of a new item of like kind and quality rather than the depreciated or actual cash value cost. Question 89. Which of the following is excluded from coverage under standard commercial general liability CGL policy? A. Bodily injury cost to customer-owned business premises. B. Damage to a client's property caused by the business's negligence. C. Pollution cleanup costs. D. Legal expenses from a lawsuit alleging slander. Correct answer. C. Pollution cleanup costs. Explanation. Standard CGL policies exclude pollution-related claims. Pollution cleanup and environmental liability typically require separate environmental liability or pollution liability coverage. Question 90. Which of the following perils is typically covered under the named perils form in a commercial property policy? A. Nuclear hazard. B. War. C. Fire. D. Earth movement. Correct answer. C. Fire. Explanation. Named perils policies specifically list covered risks, and fire is one of the most commonly included perils. Nuclear hazard, war, and earth movement are generally excluded unless additional endorsements are purchased.